All right, about to go along NASDAQ here. Looking for higher prices. Targeting buy-side liquidity that we had formed at 8:30, and we have some nice, low resistance liquidity just beneath that. So I'm entering off of a inversion fair value gap. Price prior to that inversion fair value gap ran out some smooth lows, and it was during, I entered a post 8:50 9:10 macro, but price was still respecting that inversion fair value gap, so I decided to enter long. This is on our lucid evals. And again, this is during Asia, which I really like to trade. It's a little, I've said it before, but it's a little slower than the New York session. Not as volatile. I mean, there's been a couple of Asian sessions that have been pretty wild, but generally it's a little bit more calmer, and it gives me the opportunity, especially with my schedule, it gives me the opportunity to trade and get some reps in. So nice displacement here. It's exactly what I want to see. And I'm looking for price now to eat at all those down close candles to the left of price. All those intermediate highs, I want price to attack that. And my sell limit is my first partial that I'm going to take majority of my position off, 2 of my contracts off, is based off of a 15-second chart. On a 15-second chart, you can see it looks really, really smooth. So I decided that would be a nice area to take bulk of my position off. Even though I do believe price is going to attack those 8:30 highs. They're also relatively equal highs up there, but I like that as a first partial to reward myself. And for this trade, I used the 5-minute pretty heavily. We have a 5-minute CIBI that I'm hoping to be treated as a inversion fair value gap. I want price to disrespect it and treat it as support. We also have a order block that formed directly above our inversion fair value gap. So whenever I see that, I really like that. I like to treat that as a stacked PD array. And for me, that's just more, and there's our first partial taken. So we move to break even. Whenever I see a stacked PD array like that, that gives me more confidence that price is going to support. Those PD arrays are going to support price, and it's going to hold and continue towards my terminus. So now I want this inversion fair value gap or CIBI to be, I want price to trade above it. We also have, you'll see me annotate it in a little bit. We have a 5-minute suspension block, and it's not, I mark it out, but it's not what I'm focused on. I'm more focused on that CIBI. This is the low resistance liquidity that I'm just annotating for my notes. I'm going to start doing that a little bit more just to be aware of where I believe buy stops reside and liquidity resides. That to me is where, trendline traders have rolled their stop. So if they were going short on that initial move from 8:30 to the downside, thinking we were going to go short, they were going to trail their stops above those highs. So for me, I like that as I like to attack those retail and trend line, ideas. I like to attack those. So this is our 5 minute suspension block. I'm not too focused on it, only because that SIBI is much larger, and that's where I believe my focus should really be. But it's just something I wanted to annotate. But you'll see later, when I take a screenshot and I post it, I actually don't include the suspension block because, again, it's not. Yeah, price didn't respect it as well as I wanted to. What price respected more was that 5 minute SIBI. Just because that suspension block is inside that SIBI, the SIBI is more important, but just something I wanted to annotate from my notes. So now we have entered the 950 1010 macro, and I see that 950 down close candle as a way to trip up sellers to go short. They see that as, oh, okay, well, there's our retracement back up, and now we're going to continue short. And I don't see that. I see that as us taking a minor sell side, and to trip up traders short and, to continue long. So, if I was in a position to add here, I would potentially add if I see price trade back up on a down close candle. I would treat that as an inversion fair value gap on the 1 minute. See right there, I would probably enter a second contract if we trade back towards that. It's actually perfectly aligned with that 5 minute SIBI consequent encroachment. So that would be a nice area to add a partial. But I like this reaction. Price at that macro open trades down, and then immediately within a couple minutes we get a counter reaction to the upside. That to me is bullish. That to me is shorts getting wrecked right there. People that went short are getting wrecked, getting their buy stops triggered. And again here, I want price to continue moving up, start to trade in the upper part of that 5 minute SIBI, and this is exactly what I want to see. And again, we're just chilling on this trade. We also have a 5 minute, and this is where I have a 5 minute chart on another screen. We have a 5 minute order block that formed. I really like that, and I like the fact that it's stacked on top of that 5 minute SIBI that we can now treat as a inversion fair value gap. And the mean threshold of that 5 minute order block is directly below the 5 minute inversion fair value gap consequent encroachment. So that's going to be, I believe, where I trail my stop to in a little bit. Right here could be another opportunity if I wanted to exit my position, run down my equity. Let's say I wanted to just get out of this trade And there I decided to, roll my stop up to lock in some more profits, but we took out that high that we originally got our partial on, and right here I could take another partial, or I can move my stop up. Again, everything looks healthy here, so I decided to just continue to roll my stop up a little bit, and now my stop is a little bit below, again, that mean threshold of that 5-minute order block, and a couple of handles below the consequent encroachment of that 5-minute SIBI turn inversion fair value gap. This is a market maker buy model. So at this point here, I'm also, I'm cycling through the time frames. I'm looking at a 15-second chart, and this is something I'm starting to get a little better at. The 15-second chart is starting to show signs that we have a market maker sell model forming, and if we let's say we get that 15-second market maker sell model to form, I'm looking at those lows, those relatively equal lows that we formed just below that 5-minute suspension block at around, I think that's around that market open of that macro open between 9:50 and 10:10. So that's the first warning sign for me. But right now and right here, as we dig into this inversion of fair value gap and that 5-minute order block, I trail my stop up a little bit more, but I want to see price here respected. This is kind of the I'll annotate it a little bit. This is the line in the sand for me. And eventually we're gonna fail and we're gonna get stopped out here. But we do hit our terminus. We hit it at, when was that? At 12 o'clock midnight. So I wouldn't have really wanted to be in that trade regardless. That late, I would have wanted to been in bed. So. See here, last line in the sand. It needs to support here. If I get tripped up and get stopped out, I'm going to bed. That's exactly what happens. But good trade. On to the next one.